Chair.
Thank you, ma'am. Senator Ricketts.
Thank you, Mr. Chairman, for holding this hearing today. I appreciate it, and to the ranking member as well. And thank you for our witnesses for being here today. As been mentioned, when Silicon Valley Bank and Signature Bank collapsed in 2023, it wasn't just their customers that were affected. We saw commercial deposits flow out of small and mid-sized banks all across the country and into a few of the larger banks, as you were just describing, Mr. Harrison. This wasn't because those financial institutions were suddenly weaker. In fact, many of them were very well capitalized and stable. It was because businesses with balances above the FDIC's $250,000 limit realized their funds might be at risk if they stayed at a smaller institution and shifted their money to one of the bigger banks overnight. That left our small and mid-sized banks, community banks, regional banks, and credit unions at a disadvantage, scrambling to retain funds and making it harder for them to keep serving their local communities. And similar to my colleague from Minnesota, Nebraska community banks are the lifeline of our communities. We don't really have any of the big banks. Our largest bank would be First National Bank of Omaha. And these are the ones that finance our farms, our businesses, and really provide for our families' livelihoods. So they support job creation, provide capital, small business growth, and keep our local economies thriving. Mr. Harrison and Mr. Kelly, you both represent financial institutions of various sizes, and I think you answered a yes or no question about after the collapse, did you see deposits flee? Can you talk a little bit about what degree did you see commercial depositors moving funds away from your institutions?
Senator, we did not see movement. We had a pending deposit that was about to happen when that happened, and it was put on hold.
Okay.
So if I recall correctly, I think several of my colleagues have said pretty much the same thing, where they had to fight for deposits, but I'm not sure that these individuals at this table, unless I missed something earlier, saw flight from their respective banks.
And so did you see then that this didn't happen, and so there really, even after things died down, business kind of went back to normal? Is that accurate?
I would say business came back to normal for us and in the midst of the crisis. But the reality is we know that there was flight that took place based on our conversations with colleagues. And what we're trying to do, and what the clarion call from this panel, I will tell you, is we need action now before a crisis happens again.
Mm-hmm. And Mr. Rice, would you say that was accurate for your credit union as well?
Credit unions, because the reputation and ownership structure, sir, did not. Credit unions actually grew 2% during that period because of the stability of a credit union. But again, contagion and fear are dangerous. So when the next wave hits, it could take anybody out.
Mm-hmm. And so, Mr. Kelly, you said some of your colleagues saw some of that fear or some of the deposit, even if you didn't experience it yourself. Did some of the other institutions that you know about, did they see those deposits start coming back after things kind of settled down?
I don't know the exact answer to that, Senator. Just don't know the answer to that. But that was from some of my colleagues in the mid-sized bank coalition. Bob may be better to address that issue than I.
Sure.
Maybe, Senator, to touch on that. Us personally, we lost several tens of millions of dollars, but not significant relative to our size, and it did go to the GSIBs. But some of my peers, they lost up to 10% of their deposits within a week, and a very significant amount of deposits. Some of that came back, but not all of it.
So some of it did come back, but not all of it.
Not all of it.
Again, getting back to just the perceived risk from...
That's correct.
Yeah.
Once it moves, it's much harder to get it back.
Yeah, very good. Mr. Adley, sorry. In your view, what risks does it pose to long-term competition and credit availability in local economies by having the risk out there that these deposits could flee?
Well, great question. And, to follow up on the colleagues on the panel here, obviously our experience was a little bit different when I was at my prior employer at the bank. We put shoe leather down and really, ground it out and made sure that we kept those deposits so that they didn't leave. That said, from a, systemic risk perspective, that, obviously my former hat as a regulator concerns me a little bit, that you could increase the concentrations at, smaller depositories. Say they load up, 20 million here, 20 million there, 20 million there, and all of a sudden they're at, $500-600 million in, now insured deposits. Is that going to create systemic risk to the platform as a whole, right? And is that going to be cost-based into the system? Mm-hmm. That is something that, from my former regulator hat, worries me a little bit.
Yeah, I'd have to disagree with that. I'm sorry, because I think that by balancing, leveling the playing field, we're spreading out the risk. What we're doing now is we're concentrating it in a handful of institutions.
Can I just have one more quick question? Mr. Chairman? No, I guess that would be no. I will submit a question for the record. How's that? How's that, Mr. Chairman?
Well, actually, it's her time. We're eating. I know that we all have more commitments.
No, that's quite all right.
You want to give him 10 seconds to
Sure.
ask a question?
I was going to say, just
and not get an
is there just any other reforms you can think of that would be that are not in the bill that we ought to be considering?
Yes, and I'll take 20 seconds, and I don't mean to take Senator Alsbrook's time, but I would say the biggest thing that should be discussed is whether or not the systemic risk exception should be applied the way it was, because that created this notion that every deposit was now insured. Right? Is that good policy? I don't know. I will offer that I think that it is counterintuitive to the least cost deposit insurance test that Congress has created, and that should be something that's debated longer term.
Can I add in, if you don't mind?
Also Brooks. Oh, yeah.
Resolution and emergency powers. Those two topics we had in our recommendations.
All right. Thank you all very much. We're going to Senator Alston Brooks.
Thank you, sir.
Thank you so much.